Hello, and thank you for joining me. My name is Fernando Zuda, and I will be your host for this short video about debt service coverage ratio, specifically increasing your annual income by 30%, offering DSCR loans for investment property financing. And if you don't know by now, I'll tell you, I kind of have a theme, which is increasing your income by offering non-QM loans. Let's get started. So the theme, as always, is increasing your annual income by offering da-da-da-da-da-da. In this case, it's DSCR loans. Now, I want to remind you of a fact that I initially mentioned in a previous video / webinar, but it's from ZipRecruiter, and according to ZipRecruiter, the average mortgage loan originator funds only one loan a month. One loan a month. That's it. If you want to know more about that, you can see my video on YouTube called Increasing Your Income by 30% by Offering Non-QM. I think that's what it's called. But it's in my YouTube channel. Anyways, the average MLO funds only one loan a month. And I went down, I broke down the math, and the average mortgage loan originator makes about $70,000. However, I showed how the top MLOs fund 3 or more loans a month, and they make, of course, 3 times the amount as the average mortgage loan originator. And the difference has to do with the top MLOs, the ones that fund 3 or more, embrace alternative lending options. I'm specifically talking about non-QM because I am the non-QM insider. So in order to get the most out of this video, I need you to stay till the end. If you do, I appreciate it. And as a thank you, I am going to offer you a free DSCR calculator. It's a way to determine your DSCR. By the time you're at the end of this video, you'll understand why that's important. But please stay till the end and receive a free gift. It's just the best thing you can do if you're trying to gain knowledge. So, as I said, my name is Fernando Zuda. I am the non-QM insider. I have over 18 years of experience selling non-prime loans, right? I'm also the author of a book called An Insider's Guide to Non-QM and an upcoming book called A Comprehensive Guide to Non-Qualified Mortgages. I'm also the host of the podcast and blog Non-QM Insider. I say this all because I truly believe that the information I provide for you here on my website, in the articles I write, in my books, I truly believe they are of value because I've been doing this for so long that at least my experience is that when people ask, they do find this information very valuable. So let's set some expectations. This video is relatively short, and it's going to give you a working knowledge of debt service coverage ratio. You probably won't be a DSCR black belt, but this video is a good jumping off point, and I've done, I think, what I believe is a good summarization of the DSCR program. Now, whenever I talk about any kind of program, there's always a handful of things that people say or do or think that prevent them from originating whatever it is, fill in the blank, non-QM, DSCR, bank statements for income, whatever the case may be. In this case, what I find is that people a lot of times just don't know what DSCR means. They think, is it a stated loan? Because I used to do stated loans in the past. Is that what DSCR is? So oftentimes I'll get, what is DSCR? Or can I do a DSCR loan for a primary residence? Or can I use the DSCR program for a commercial loan? And I'll discuss all this throughout this short video. So first, DSCR stands for Debt Service Coverage Ratio. That's a big, long, ugly term. It's easier just to say DSCR because that statement or that term is kind of convoluted and scares people away. And I'll show in a little bit what it really kind of boils down to, but that's what it stands for. No, it is not stated. Stated loans are you are essentially stating your income here. It's a little different. I'll explain that in a little bit. DSCR loans are used for financing investment property only, right? No primary residences, right? DSCR loans are for residential real estate, 1 to 4 units, 1 to 4 unit properties, or condominium or condos, condominiums. But in reality, I usually see these between 1 to 4 units. As a side note, anything above 1 unit, 2 units, or anything above 1 unit, and I'm referring to 2, 3, or 4 unit properties, tend to be better for this program because you have more renters on the property and you're more likely to qualify. So when we discuss DSCR loans, there is no debt to income. And earlier I said, is this stated? It is not stated. We're not stating an income. We're actually leaving the income section of the 1003 empty. Now, one thing we do look at is we look for your mortgage payment history. You can have no late payments on any mortgage payment, any mortgage or property within the last 12 months, right? So if you own other properties, we're going to want to make sure you have a history of paying those loans on time. But for DTI purposes, we're going to disregard all your other liabilities. So if a borrower has credit cards, car loans, other mortgages, right? We're not going to use those in regards to calculating DTI. Now you still have to make your mortgage payments on time, but we're not going to count a DTI as with a regular loan, a conventional loan, shall we say, an A-paper loan. Now, because of a lot of the things I mentioned, DSCR loans are faster to originate, and that's because they're not regulated by TRID. That's the TILA-RESPA integrated disclosures, but most people know it as TRID. And we're looking at less information. Like I said in the earlier slide, we're not calculating DTI. We're not going down your credit report, adding up all your liabilities, and then taking all your mortgage payments and all this stuff. We're not looking at that stuff so that there's less information to look at. We're also not looking at your income, right? Because the income section is left blank. The employment section can be filled out, but the income section is left blank, right? Also, you can order the appraisal and the rent survey immediately. So again, going back to TRID, you don't have to wait for the borrower to sign a bunch of documents, get it back to you, wait 3 days, do anything like that. You can order the appraisal and the rent survey immediately. Okay, so how do we qualify a DSCR loan? Well, the property income qualifies on its ability to cash flow. Now, I'm not using technical terms. I'm using layman terms that we can all kind of wrap our arms around. Because if you go to Google or look it up on the internet, they're going to give you a kind of a convoluted explanation and use like net gross incomes and things that really aren't applicable. At the end of the day, the calculation for DSCR is a lease payment divided by the principal, interest, taxes, and insurance. That equals the DSCR. So here's an example. I have a mortgage payment, I have a rental lease payment of $1,150. I have a tenant in my property and they pay me $1,150 a month. My PITI is $1,000 a month. So if I divide my lease payment by my PITI, I get a DSCR of 1.15. That means I'm cash flowing, right? My property cash flows. As you can see, I'm bringing in more money than that property cost me, right? Now, if there is not a 1 in front of that point, then my property doesn't cash flow. So if it's 0.9 something something something, or 0.8 something something something, or 0.7 something something, I'm at a negative cash flow, and I'm probably not going to qualify. At least post-COVID, that is less likely to find a lender who will fund that loan or originate that loan for me, right? So the calculation is pretty easy. It's a lease payment divided by the PITI equals DSCR loan. So how do I determine what my lease payment is? So first off, all loans need a 1007. A 1007 is a form that an appraiser fills out. It's also referred to as a rent survey. So when you order the appraisal, you will also order a rent survey. Now, along with going out and determining a value for your property, the appraiser will determine what rents are in that area and what you can expect to receive in rent for your particular property. Now, if it's a purchase, we're going to use the rent survey figure that the appraiser provides us in the DSCR calculation, right? However, if it's a refinance, right, the property will most likely need to be rented out. You can't have a vacant property because it's not going to cash flow, right? So you're going to use the lesser of the actual rents or the rent survey. So if the rent survey says you can get $2,000 a month, but you're leasing it out for $1,000 a month, we're going to use the $1,000 a month in our DSCR calculation. But that's it. It's really not that complicated. The name makes it a little bit scary, but it's not a complicated figure at all or calculation at all for you to figure out. Now, that was it. That was really it. It's like I said, it's not a complicated system. It's just that it sounds complicated, and just the name alone scares a lot of people. But in conclusion, when people say, what is DSCR? Is it the same as stated? No, DSCR is not the same as stated. The property income qualifies on its ability to cash flow. Or another example I get all the time is, can I originate a primary residence or commercial property? DSCR loans are for purchasing or refinancing, including cash out, non-owner occupied residential real estate, typically 1 to 4 unit properties. It is not for a primary residence. So if this is the home you and your family are going to live in, it's not for that circumstance or that scenario. If this is for an apartment complex with 100 units, it's not for that. Or if it's for a 5-story office building, it's not for that. Now, there are commercial lenders, and they may have their own DSCR programs, but that's separate from what I'm discussing here with you today. So, full disclosure, my employer is Home Express Mortgage, and we happen to be the leader in DSCR loans, at least with our contemporaries in the non-QM space. And the reason that is we offer 80% LTV on a purchase, 75% LTV on a refinance, including cash out. Now, that's an extra 10% LTV we offer over any of our competitors. Now, you do need a minimum of a 680 mid-FICO and a minimum loan amount of at least $150,000. I want to thank you for watching this video, but let's continue the conversation as always. So as I said, if you look down below, there is a link, and that link is called DSCR Calculator. And if you click on that link, it should take you to a website or a page that will download that free calculator for you. Thank you for watching this entire video. Also, if you're not doing business with Home Express Mortgage, there's another link there for a broker package. Complete a broker package, send it to me, and let's get you signed up so we can start doing loans together. Look for a scenario, right? If you have a scenario in your turndowns that you tried to get done before and you couldn't, go through them again. Let's see if there's an opportunity there waiting for us. Don't forget to visit my website, non-qminsider.com. There's a lot of great information there. It's all free. You can download it. You can click on the links. There's free articles and free podcasts. If you want to email me at fzuda@homexmortgage.com, and my phone number is 714-267-2359. I appreciate you watching this video, and I look forward to hearing from you soon. Thanks.